Um, well, if I think about it broadly, just not just price, but I would say, particularly in 2025, which is the last, whatever, 9 months, um, we have had the friendliest crypto environment in the US. That justifies the
Exactly.
price increase in and of itself.
Nice to see you again. It's
Yeah.
funny timing because in the last few hours, Bitcoin has gone from around 113K to 109. And I wanted to actually touch on volatility first and just comment that Bitcoin is sitting under 1% in the volatility index, some of the lowest levels we've seen in years. Why do you think volatility has been so low this year?
I think, look, it's a speculation, but a lot of it has to do with the influence of Wall Street, of traditional financial businesses that make money off of trading the volatility, right? And so the difference between traditional retail buyers and Wall Street is retail buyers mostly go long. Uh, they might use leverage, but they tend to have um, a desire to make a lot, right? Whereas traditional financial companies, that's not how they make money. They make money through arbitrage. And they also, by the way, use a lot of leverage. And so uh, any price movement, they're going to respond to. And in 2017, when the CME in the US began to allow Bitcoin futures, this was December 2017, uh, I told my constituents that this was frankly bad because now there would be an ability to short Bitcoin. And over time, that would cause it to peter out anytime there were any rallies or attempts at big rallies. And the only time you would get a sustained rally would be if something substantial had changed in outlook, but it would have to be extremely big event. And I think that's pretty much bore out over time. You know, the if you're trading, if you're a buyer and you are sort of competing against people who are really excited about a 50 basis point profit, then which they can magnify, to 10x or 100x with leverage, uh, it's going to make it very hard for you to make multiples on your money in that environment, unless something at the secular level changes, either for good or for bad. And if you look at all of the positive things that have happened in the last like 2 years around Bitcoin, more positive, I would say, than at any other time since Bitcoin was created. Um, and yet, we're up 2x, a little less than 2x from the pre-halving price. It's a very modest gain for what types of very positive news has happened. And also, I'm not surprised we're still in September. August, September, you know, months traditionally where you've had some retreat in the prices. I think uh, the place for people who are long Bitcoin to really be paying attention to is October and November,
Mhm.
because November, we're 18 months post halving. And traditionally, that's when we've had a retreat in prices, a substantial retreat. We never really saw a massive bull market, So maybe we won't see a huge downward correction, but you know, it's just speculation. We don't know. So I think if anyone is thinking about, well, maybe I should be um, taking what I can get in 2025, you know, wouldn't be the worst decision. Maybe wait for what is possibly going to be a retreat in prices and come back in then. It's a risk. Maybe it never goes back to you know, lower prices. But historically, Bitcoin has moved a lot, particularly post halving after some period of time, like it will be in November. So I don't think that'd be a bad strategy.
So Bitcoin's just price action is sticky at the moment, is what you're saying, but still they capture volatility.
Yeah. Anybody who's you know, loaning their Bitcoin, let's say, to hedge funds and whatnot, a lot of hedge funds are, you know, they need to uh in order to have their short positions, they need to borrow. There's a robust market in lending Bitcoin to those people. Those people are going to reduce the possibility of Bitcoin going up by a lot. I think we've seen a lot of selling into all the rallies in the past like year and a half, which of course puts a ceiling on where it
Yeah.
can go.
So
You know,
so
long
from your
term, I still think it'll be an attractive asset, and lots of people will own it. But maybe the at least this cycle shows, this happening cycle shows that at least for this one of the last four, the happenings may be less significant going forward on prices.
Yes, and maybe the fact that we went to all-time high for the first time before the halving is also a factor in this story, I think. So
Yeah.
if from your perspective, when you look back retrospectively over the year and a half, um, what stands out the most to you?
Um, well, if I think about it broadly, just not just price, but I would say, um, particularly in 2025, which is the last whatever 9 months, um, we have had the friendliest crypto environment in the U.S. And we have had a massive movement, which I thought would happen among larger corporations to participate in the crypto space, kind of by wanting to adopt stablecoins, which I think will be the stablecoins are really the biggest innovation that's come out of crypto. Um, I don't know, 5 years, 10 years, most of the major economies will have tokenized their currency. That's a pretty big event. So I'd say in the US, the legislation that's been passed and pending is quite positive. It took a long time. I'm not as happy as maybe some people are because I see like what these large corporations and enemies in the government did to suppress the adoption and the usage of crypto since 2010. And now that these companies have positioned themselves to take advantage of crypto, now they're telling their government officials, okay, now you can start to permit a lot more than you were doing before. So I don't like that, but hopefully there will be some incumbent companies and some new organic crypto companies that can compete with the larger banks.
Agreed. So when we talk about the halving cycles, you don't think they are relevant anymore because it's just getting smaller and smaller, and the shock is basically we're at almost 20 million already.
What I would say is that would be a bit too strong of a position. What I would say of the four happenings, this one so far at the tail end of this, historically, what would have been a post-halving bull run, didn't perform. I don't know if there's the next halving will go back to the old pattern, or this is now how things are going to be. I can just observe it and say, well, now we have one instance at least where the halving wasn't very special, you know? And so now we have to be aware of that. Now, what that means for the previous post-halving events where you also had this massive pullback, if you don't get the ride up, does the ride down become more moderated? I don't know. You know,
And
but I think it's very risky. We're going to be 2026 is a risky time because it could be that there's a lot of people holding on to various cryptos saying, well, we're done with this bull run. I'll come back in 4 years. You
but
know, in that case, you would see a big drop off in prices as they exited the market. But I'm not predicting that. It's just one possibility.
okay, so you think the main outcome is November, December, the price goes up, and then we have a pullback and we do the year's bear market. But isn't that a bit too predictable? Or is it just known amongst the ones that follow it?
I think it's well known now that there's an 18-month, or there had been an 18-month post happening bull market. That's like common knowledge. Just because something is common knowledge doesn't negate it, right? I mean, it can still happen. But it may change the way people respond to it. And I think the bigger effect on Bitcoin now is that, you know, it's a multi-trillion-dollar asset, and it is held across many different formal financial institutions in the US and other countries. And those types of investors behave differently than the previous, you know, Bitcoin maxis. They just behave differently. They don't aspire for doubling their money. They aspire for, you know, single digits, maybe, yeah, single digit returns. And then maybe they can lever those to make them double digit returns. That's sort of what they're happy with. And that's why I say the each rally has kind of lost energy because a lot of the people who are in traditional finance sell because they're happy to pocket a, you know, a 25 or 30% leverage gain. And then they wait for falls back and then buys in again. The only way you get assets like this to keep going up in spite of people who want to short it is when there's truly a change in the long-term prospects of the asset,
Yes.
right? You're in a company and it's whatever trading at $1 billion market cap, and maybe it even has a lot of shorts. And then it turns out that what that company does is really important to, I don't know, AI or something. So it's a change in outlook. And then it's going to go up because people are going to say, oh, this is worth more than what it previously was. Those things are pretty rare, though. You know, they happen, but they're pretty rare when there's a reassessment of the prospects of something, which causes it to, you know, more than double.
Okay, so you believe that the 4-year cycle is that much of a strong.
It has been. Yeah.
I mean, it has been, it's true, but everyone forgets 2010, 2012. Those were like mini hyper cycles. And if you look at that, it basically tells you, listen, Bitcoin's so small now, this is the only way it can move.
Yeah.
And then it developed into a bit of a longer 4-year, and it's like, okay, now we have retail investment. This is how it moves. So I'm just on the wavelength of maybe something is going on and the 4-year cycle can't be taken as law, let's
Yeah.
say.
That's, you should, because we've just tested that hypothesis, and we determined it to be false, right? 4-year cycles always lead to a sustained and very large bull run. Well, that we now know is false. It was true up until this one. And now, we got a 2Xer. And I would say, absent any effects from the halvening, if you look at all the positive news globally that occurred in the last couple of
crazy.
years around, that justifies the
Exactly.
price increase in and of itself. That alone justifies it. So, the halvening didn't seem to have an effect. When I had looked at it, 2012 to its peak, you had a 50x increase in the value of Bitcoin. 2016, you had a 20x from pre-halvening prices to peak. 2020, you had 10x. And so, 50, 20, 10, you could kind of say, well, it seems to be sort of halving each time. So maybe this will be 5x if it maintains that pattern. 5x would have been pre-halvening price of 65,000. 5x would have been whatever, 325,000. So what I said is, if past patterns are consistent, then in the 2024 halvening, Bitcoin will reach over 300,000. And, obviously that didn't happen. October and November is it.
We don't
And,
know yet.
Yeah, but we have probabilities. Probabilities. I'm going to tell you, I am highly confident in the next 60 days, Bitcoin is not going to 325,000.
Wow.
If anyone on earth wants to take the other side of that bet, please do. No one wants to.
I will ask questions about it.
Yeah.
Okay.
Does anybody think by the end of November, Bitcoin will be at 325?
Okay, so I'm gonna ask a question. What would invalidate the 4-year cycle for you? If it's October, November, what price must we be above, but we can be below to show signs that, listen, this is going into March, May?
Yeah. The 4-year cycle argument, which, let's be clear, we had an N of 3, right?
N of 3, exactly. That's my point.
Right.
Exactly.
We had an N of 3.
Exactly.
So, I mean, it wasn't much data, but
No.
it was all we had. But yeah, no, it no longer can be relied upon. That's just a fact. In the next 60 days, Bitcoin's not going to go up 3x. So it can no longer be relied upon, which isn't to say, these happenings will never have an effect again, because this is only the 4th, right? I just think we have to now accept that. Don't bank on it. That's all. Just don't bank on that. Bitcoin's a multi-trillion-dollar asset. It's hard to move an asset like that, particularly in the face of a lot of people who will take leveraged short positions. So, doesn't mean it can't go up. All stocks, most stocks, whatever, are shorted. They can still go up. And I would still say it's a very good idea to have some of this in your portfolio. But the days of the 100x returns on crypto, except for some stupid meme coin thing, which who knows, that's random. Those days are over. Crypto now is moving more towards a more stable asset that will be used in exciting things like DeFi, right? Where hopefully, if you do it right, you can earn returns higher than what you would earn in traditional stock market. And that's a great place to be. It has to mature at some point. So maybe it's maturing now.
So, for example, this next quarter, okay, October, November, what's a price you think it can reach?
Well, I'm just making it up, right?
It's fine, but I mean,
honestly
it's all
know
about
nothing.
that, no?
Right. But I do want your audience to know I'm just going to make up a number.
Yes,
It's
fair
truly
enough.
made up because I have no idea. I think in any 3 week period historically, Bitcoin can go up or down by 10% or more. Right. I watched in 2020, what was it? Uh, March 11th, maybe 2020, where in a matter of less than 24 hours, Bitcoin went from 8,300 or so to 3,900, right? So it dropped 50%.
Mm,
That was during the whole COVID
COVID.
nonsense. So it can drop 50%. Uh, in any 3 week period, it has historically moved plus or minus 10. So use that, if that means substantial double digit changes are possible over 60 days, sure. Um, uh, what was it, September 30th, 2017? That was when China banned exchanges in China from trading crypto. Um, uh, Bitcoin was at like 7,000, I think, maybe in like July or August, and it dropped to 3,000. And then by uh, mid November, so that would have been less than 8 weeks later, uh, it was at 19,000. So that was what, a 6+X return. So it can do those things,
In a month,
but
it went up
well,
35 days
yeah,
from
yeah.
5 to 19.
In 45 days, it went from 3,000 to 19. So yeah,
Crazy.
that's a 6X. And that uh but is that going to happen again? Probably not. You now have a multi-trillion-dollar asset, which is harder to move. So I and I'll also say I don't think so. I'm not a trader, right? And I don't think owning crypto to trade makes a lot of sense because its movement looks more random than like anything. Um, so holding it like gold, holding it as a way to magnify the returns in your other parts of your portfolio, sure. You know, uh, I've been saying for at least 10 years, I think, um, to the average Joe, put 2% of your liquid net worth uh, into crypto. That would mostly be just Bitcoin, but maybe you do Ethereum. And if you're not going to follow it, you're just going to put some in, do it, and plan on a multi-year holding period. That to me makes sense. Uh, there's still a lot of people, particularly young guys, who put all of their money into crypto. If you don't have much money, I guess it doesn't matter. But uh, I would not advise that, like become a better investor, learn about other places. I mean, heck, Palantir in the last year has gone up, 4x. That's pretty impressive, right?
Yeah.
So, much better than Bitcoin. Um, there's there's lots of places you can put your money. Um, if you are going to hold crypto, one of the things I would say is learn about it and learn where, if you want to earn a yield, understand that that puts your crypto at risk, right? There's no free yield, but staking, that's probably a pretty low risk. The token may go up and down, of course, you can't change that, but the risk of losing all of your tokens when you're uh, like a layer one staking, I think that's not a bad place to earn a little yield, and I do that. Lending your tokens, more risk, counterparty risk. If you know the counterparty and you trust them, okay. I don't like that business. I think it's too easy to get ripped off.
Same.
Um, I I will say now, some people may think this is highly risky, but I like it. I think one of the most uh, enjoyable areas to make a return, particularly on Bitcoin or Ethereum, is in the options markets. You know, if you have a strong view, let's say in the next 90 days about where something's headed, uh, sometimes the premium you can get for writing option contracts is way more than the risk you're taking on. So I'm a big fan of writing options. I'm not a big fan of buying options as insurance because I think the option premiums you pay to protect your downside um, are too high to warrant uh, the what you're getting in return. So you know, they just
I think if you're trading, if you're a trader, you mainly need about 20% volatility up and down, unless you're using leverage. Unless you're using
yes,
leverage.
yes,
So crypto is not giving that right now
yeah,
because volatility is
and you're
so
very
low.
right. You're very right to always emphasize this leverage, leverage, leverage. Uh, anytime for your audience, you know, anytime somebody tells you about their returns, always ask a very simple question: levered or unlevered, right? Like people, I was in venture capital for decades, and sometimes people would look at the VC returns and say, "Oh, you only made 14% or 15% or whatever over 10 years, but I made 25%." Yeah, but you were levered 7 to 1, right? So that's not an apples to apples comparison. Like you took extraordinary risk, higher risk than me. So yeah, um, leverage is it's nice to be able to access it, but I generally think of leverage as a poison for most people because our brains aren't wired to think of multiples,
Yes.
and that's what leverage can do. It can multiply your mistake.
Yeah. Um, touching back to the macro, um,
Yeah,
what role do you think interest rates now are going to play? Because it felt like when they lowered it, sorry, when they raised it in 2021, 2022, that was the reason we were going to have a bear market. And then we'd had the bear market. Now, if he does a year of lowering the interest rates,
yeah.
what can happen?
Well, you and I are probably reasonably smart guys, but whenever you introduce interest rates into a conversation, uh, the quote smartest people in the world are idiots, right? I'm pretty old. I've watched uh, various uh, central banks around the world use interest rate levers to change the price of their currency vis-a-vis other currencies or to stimulate the economy, cool it off. Uh, I don't think, and I don't even say this flippantly. I just don't think they have any uh, reliable track record to prove they know what they're doing. Uh, I think it's just too complex, and so how we can create a model of how high interest rates uh, should maybe detract from people wanting to own crypto because you can swap your crypto for these guaranteed high interest rates, right? But that hasn't been true in all cases. And then when
Hmm.
interest rates get cut, you could also argue, well, I can't get my returns from holding debt instruments, so I will go to more risky assets. And the financial markets have done that over the years. You know, most famously with the financial crisis, where people just kept chasing yield, taking more and more risk, and not appreciating how much risk they had. Um, well, I, though, have a view that interest rates, we shouldn't try to understand how interest rates directly will affect the prices of crypto, or in particular, Bitcoin, but how they will affect the broader financial markets. I do think we see a pretty strong pattern of financial market performance and crypto performance, right? We were supposed to be dislocated from that. If the financial markets, whatever they were doing, was irrelevant because Bitcoin was this hedge against financial market manipulation and debasing currency and all that. And what we have seen instead is the crypto moves uh, much more closely now with the rise and fall of global financial markets. So if interest rates were to go down by a lot, that should be stimulative to the price of globally traded financial assets, and it should probably help Bitcoin. But it all depends on how the financial actors operate, because Bitcoin now, like it or not, is a prisoner of traditional financial markets. That's just, I think, what we're going to see. It may have more magnified return losses, but it's going to move in correlation, I think, to the financial markets now,
And
especially as a result of things like, ETFs in the United States.
do you think this is delaying the retail wave or unrelated?
Well, I'm glad you brought up the retail wave. So, the retail has pretty much been absent from this rally.
Nowhere.
Some people say, which I think there's some truth to, they got burned by 2020, a bunch rushed in. 2021, you had the collapse, you had a lot of fraud, FTX, Celsius, and others, Genesis, whatever you want to call it. And then they, decided to dip their toe back in the water with meme coins. Well, sorry if you were buying a lot of those, hoping they were going to go up, forever. You're mistaken. And so I think retail will never be as important in crypto as it was, say, 5 years ago. Never again. It just won't. Because retail's not really a factor in any globally traded asset anymore. It's just in the U.S. markets, there's 20 firms that control virtually all the trading. And when retail does participate in the financial markets, they do it, especially in Western countries, they do it through retirement accounts. And most people who participate in stocks from retirement accounts are not traders. They put money in and they keep assets for a long time. So it's kind of dead money, if you will. So yeah, I don't think retail is a factor anymore. That's what I would say. Doesn't mean there may be, short-lived rallies, but I just don't think they matter as much.
Um, it is a cause for concern though, because if Bitcoin can't get to 200,000, the way I view it, the power law is wrong. Plan B has been wrong for ages, and
Well, come on.
no,
Like, yeah, no, you're right, 100%. But Plan B was, I love the guy who did it, right? I mean, like, whatever. But it's a little bit like, seeing
fair
images
enough.
of Jesus Christ in your tuna sandwich,
Yeah,
like there
exactly.
was nothing statistically reliable about what he was doing.
True.
He was back testing weird formulas and whatever. So, yeah, I, I don't think you will see these enormous rapid increases that hold, um, uh, in crypto as a pattern like it used to be. Having said that, when it goes up, if it does hold, it will go up in a relatively short period of time because there'll be some sentiment change, right? And but we're not going to see the stuff we saw in 2012 and 2016 and 2020 simply because the asset is, I think, is the market cap is too high. I mean, when you get into multi-trillions, it's hard for that to move fast rapidly.
It
It
is.
can happen, it can happen. I mean, you can take examples of stocks, but there was extraordinary circumstances around those, and those don't happen very often.
It's 5% of the public debt, 37 trillion, as a comparison.
Yeah, whose public debt?
America, 37 trillion.
Okay. Yeah, depending on how you measure it, it's 37 trillion or so, whatever.
Or so,
Yeah.
or so.
So some of that's owed by other government, but yeah. Yeah, I guess my only point is, I like crypto. I think it does behave differently than other assets because it is globally traded 365 days a year. That's really nice. But also, yeah, if you're going to buy it, expect to have a 5-year time horizon. That's what I tell people. Certainly don't put money into Bitcoin that you expect you will need in under 3 years. That's crazy because is it possible to have a 3-year bear market? Yeah, we just had one. So you don't want to do that, right? A 5-year time frame, I think, is really reasonable. You may go out before that time if you're happy with your return, but 5 years is a reasonable amount. And I do have a long-term view, this goes over many, many years, that there's an upward bias with Bitcoin, if for no other reason that it's got a limited supply. So I like holding it, but I would just be cautious for people who don't have long-term holding time frames and who are over-concentrated in this asset. Same thing I would tell anyone else. Over-concentration, sadly, is a theme of our existence. I mean,
Over
what
over concentration, you said? Over what?
Yeah, over-concentration is a theme of our existence right now, right? I mean, if you look at something like the S&P 500, I haven't done the calculation recently, but probably the top 10 stocks are more than, I don't know, 30% of the 500 stocks from a market cap perspective. That's kind of scary, right? There's a lot of value concentrated in a few assets. It's a trend, right? It's the 80-20 rule or whatever you want to call it. It's also a reason why you should definitely periodically look at your portfolio and see where maybe you have way too much exposure, right? And it's always it's a thing that you can't necessarily it's not intuitive, but you're doing really well in a single stock, which should be good news. But then you look at your portfolio at the end of the year and you have more than 50% of your worth in one stock. That's a bad thing, probably, right? So that's why you can't just look at something and then not look at it again for 5 years. During the financial crisis, right before it, the financial stocks in the S&P 500 represented 25% of the market cap. It was like 24% of the market cap of the S&P 500, even though at the time, financial stocks only represented about financial commerce only represented about 8% of GDP in the US. So it was 3x overrepresented in the stock index, which was bad. And then it retreated very abruptly, as you know, and got more in line with where it should have been. So these are things I look a lot at. I look a lot at like when concentrations become really amplified.
Was there an overconcentration in the dot-com bubble?
Yes, very much. Yeah, very much. You had you know, the dot-com bubble had like these what they called the bricks and mortar, the critical infrastructure did extremely well, but the two largest market cap companies in the world in the year 2000, number one was Microsoft and number two was Cisco, which probably more than half of your listeners have never heard of.
It's
Cisco, right, which went public in 1991 at like a 225 million market cap. And by the year 2000, 9 years later, it was trading at 550 billion market cap and was the second most valuable stock, even though its market was limited. It was a layer 3 switching company, like Ethernet switching for enterprises. That was preposterous. 20 years later, that company was what was it? Trading at an $80 million market cap. 20 years later, an $80 million market cap, even though its revenues had increased by 3x and its profits by more than 3x. That was wild, right? Imagine if you had kept all your money in Cisco and it went nowhere. And by the way, I always
Cisco, what do they do exactly? Cisco,
they produce
IT.
See, you don't even know.
I heard the name. I don't know what they do.
Layer 3 switches, Ethernet switches.
Ethernet switches. So something which many people do now.
Yeah. So you know Wi-Fi?
Yes,
You know the access points in Wi-Fi? So that's a switch,
that's what they did.
router or a switch. So there wasn't any Wi-Fi then, but it's like hyperlink.
So the idea basically was valued at 80 billion, you said, or 50 billion in the dot-com.
It was valued at $550 billion.
Wow, okay.
And that seems like a lot today. That is a lot, but it was
It's a lot.
it was unbelievable. And I thought it was insane. And this was an equipment company with equipment company margins, which aren't that great. And every Wall Street investment analyst was telling their clients, you have to own Cisco. I was at a conference once where in like late 99, this analyst said, no matter what, you have to own Cisco. And I asked the question, no matter the price, I have to own Cisco? Like, no matter the price? Like, shouldn't it be I should own it if the price is appropriate? And it was like, no, they'll earn into their price. Within a year, it had collapsed. You know, something again, some of your listeners hopefully lived through the 2020 is not that long ago. It's only 5 years ago. When the S&P dropped in a few weeks, it dropped 34%, you know, more than a third. Now it recovered, but still, the NASDAQ, the tech heavy index in the United States, it peaked at about 5,000 in the year 2000, the index. It was not until 2015 it returned to 5,000. It dropped to 1,000. 5,000 to 1,000 is an 80% drop. It dropped to 1,000 and then fucked around for 15 years before it got back to that. I always mention that fact as well. You can go half of your career in a suppressed market. You know, that's not like, there's no reason why it can't do that. So this is the reason why you have to be diversified. Now, it's up to each individual how much you want to be diversified. By most people's measure, I am insanely non-diversified. I'm insanely concentrated. Okay, whatever. But that's my choice. And I do it with the full knowledge of that, right? But for most people who don't want to play the market, no, you shouldn't do that. Sadly for many people, at least in the US, they're highly concentrated on one asset, which is a piece of real estate, their house,
Yes.
right? That's also probably a bad idea. And subject to interest rate risk if they have variable rate mortgages. Which leads to financial education being a very important thing that still hasn't really happened in our world.
Yeah. I think now with Bitcoin and all this industry, it's all digital now. So there's an element of people need to learn it. And
Yeah,
it's not the easiest to learn. It's not the easiest to learn. So that is definitely an obstacle.
I know.
Though I think so. You said that Cisco took a long time to go back up. When you said that, I never did. It's true. Okay, because it's at 80 million now. But if Bitcoin got up to the halving faster than it ever did, and now it's just, I feel that's, I don't know, an interesting point, which I think should be considered, because it should hit 200,000. It should hit the power law. If it doesn't, I mean, honestly, if it doesn't, I can see it go back down to 40, 44. Why should it stay at that level if it won't go to 200, sort of? I don't know. Maybe I'm just thinking aloud here.
Yeah, I would say, and by the way, Cisco now in 2025 is at 267 billion, but that is still one half of what it was worth in 1999, right? Or 2000. So it's still, it was a shitty investment. And what I would say to you about that is, I have done best in investing.
You can hear me. I cannot hear you. Now I can hear you. Now I can hear you.
You can hear me?
Yeah.
Okay. And you can hear me loud enough?
Same as before.
Okay. I was saying I have lost money, there's two situations, two investment categories where I have done well. Category one, an asset that is neglected. People just kind of ignore it because they just don't understand it. Best example of that is crypto, right? The other time I've done well is when it has been despised. People have hated it, right? They just look at it and say, that's a terrible asset to be in. And that would be my internet stocks in 2001, 2, 3, and 4.
Internet stocks.
Yeah, they were the most hated investment category in history. Right?
Okay.
Like more so than your audience could ever imagine. Like more so than they could ever imagine. There were investors would go out and say, I never owned an internet stock. Don't ever accuse me of that. That's how much people were ashamed of being an internet. Because they all dropped between 95 and 99%. But there were really shitty companies like Amazon that dropped like that. I'm being sarcastic.
Yeah.
They dropped Amazon dropped 95%, Priceline dropped 99%. And people were like, yeah, they're just shit. Obviously, people didn't know any better. Well, so deeply despised assets is also very attractive because most of the time, they're not as bad as people think. When I lose money, and I consistently have lost money, it's when I invest in things that are popular. So I hate popular stocks. I hate them. Every time I have tried to ride the wave of something that everybody is saying they like, I lose money. So I learned my lesson. And sometimes I've missed out, right? There have been times like I never owned Tesla, never owned it. And I didn't like that business. And it was super popular. And everyone on Wall Street was saying, you should own this. That reminded me of everybody telling me I should own Cisco. I'm like, yeah, I'm not going to own that because if you all like it, is there any new guys coming in to buy it? And it turned out there were. So it's not a rule that I would give most people, but it at least be cautious.
Yes.
By the time everybody is saying something is a good investment, well, everyone owns it.
Okay.
So who's going to keep buying?
Can I float you a scenario? So Solana went up from cents recently. I was looking at the chart, and it went up from 22 cents to $250 in around a year, or a year, I think, if not less. I can't remember the date, but it made that run.
No, not that much. No. Solana went down to like
No.
$10.
Then it went down to $10. So it went up from 2021. It went up from 22 cents
From 2021. Yeah. 2021 it went up 100x.
to $250, and then back down to $8-10. So at that point,
Still good.
that's like 97% as well. So at that point, are you saying Solana is the same potentially as Amazon since it's made its recovery? Because then I'm bullish on crypto
Yeah, I would
as an
say that,
industry.
like, here's what I would say. Solana probably shouldn't have gone from, I look at market caps. It had about $100 million market cap in 2020, right? Beginning of 2020. And by mid 2021, it had 90 billion market cap. I think that's what the math was. It probably shouldn't have been that high at the time. It also shouldn't have retreated as much as it did. But the when everybody is saying something is awful, but there's not a lot of reasons they're giving you, you should look at that asset. Okay, that's what I'm saying. Like sometimes the crowd is right, but sometimes it's wrong. But you have a lot more opportunity to do well when a stock has just been, when a stock is down 90%. I mean, like, there's a lot more opportunity for you that maybe people didn't even think about it. They just saw it going down and decided they had to exit, but there wasn't a lot of thinking. That to me is a good place to be looking for deals where you can earn a multiple, right? There's no guarantees. Maybe the reason is because the company's going out of business, right? That happens too.
But then it goes
you
to
can
zero.
assess that. Yeah, you can assess that. That's the point. You can assess whether or not that's true. I often tell people you have to learn some accounting, right? You have to go look at the 10Ks or the Qs and look and if the company's giving guidance, look at what the guidance is. Doesn't mean it's accurate, but it's information that you can then say, wow, I think this company has a book value, a net value that's more than what the market thinks. Most of the investors in the stock market don't do very thorough analysis. They don't. And the best place you can be is when there's a change in the sentiment about an asset, right? Like, because then you can get multiple expansion, not just like PE growth. Which the most recent example of that would, of course, be the AI phenomenon, where a lot of people globally decided that AI was going to create trillions of dollars of value. So they bid up the prices of companies that were participating in that very rapidly. That doesn't happen very often, but if you're lucky enough to be around when it does, yeah, participate in that. Change in sentiment is important. And on the downside, usually the sentiment is overly negative. That's my experience.
Okay.
Right.
So what's the plan of action for the next quarter? And let's say we go through a bear market in 2026. What
Well,
what
if we
can
knew
we
for
do?
sure,
What can we do to prepare
yeah, well, if we knew for sure we were going to go in a bear market, we would be reducing our exposure right now. Okay.
right now, or
Uh,
maybe in
uh,
October?
yeah, but well, yeah, I wouldn't dilly dally. I would
It's
reduce
true.
my position. If I thought if it was, the problem is we don't know. And your audience should know, I don't believe I know anything more than they do, but I do know how to use a decision tree. Even though I don't know what's going to happen, I can create some possibilities and then determine which path seems best for me, right? Um, let's say there's a 50% chance of a pullback in 2026. Why 50%? Because it's a flip of a coin. It could go up, it could go down. All right, so it's 50%. Well, 50% is a pretty high chance of a downturn. So depending on what your long-term, holding period is, I would say, yeah, you might want to reduce your exposure to crypto, but where would you put the money? Um, if crypto goes down, I think it's because the stock market has gone down. And so what you really can start to do is say, which direction do I think the stock market's going to go up? The US stock market through the S&P 500, I can't say it's overvalued because it's really all relative. I would just say, um, compared to history, its value is historically very high, right? We are at, depending on the PE multiple you use, the Schiller multiple, which is a 10-year moving average, or the current multiple. I think we're at, like, for the S&P, it's like in the 30s. I think that's right. That's very high. Individual stocks like tech stocks, Nvidia. What are some of the others I look at? Um, some of these, uh, Coinbase is up 100%, which makes sense because Bitcoin is up 100%, right? So I'm not terribly worried about that one. Tesla, all in the past year, Tesla's up 75%, Google's up 50, Nvidia's up 50, JP Morgan's up 50, Facebook's up 40. I mean, uh, all of those companies have very high PEs, some in the hundreds like Palantir. But Google's PE
they're all
isn't too
high,
bad,
basically, is what you're
28. Yeah.
saying.
Yeah. Even Apple, it's only up 7% the past year, but its PE is 37.
What
Pretty
do you
high.
think about miners at the moment who are also investing in data centers or data
Well, it
center
turned
companies?
out, yeah, that was a good idea, right? No one, they benefited from the change in sentiment about what they do.
Why
Um,
change? Why change in sentiment exactly?
well, because no one was thinking that Bitcoin mining was going to be a place for AI 5 years ago, right? I wasn't thinking that. And so the value of these businesses, particularly after uh, uh, what is it, Core Scientific, when Core Scientific, it got acquired for $9 billion. Uh, Core Scientific started out as a Bitcoin mining operation, but then because it had access to energy and good facilities, it was uh, its value went way up, right? And that's like an Easter egg. That's like just a present. But um, I would say the value of that AI business opportunity is probably fully priced into the mining companies. You know, like I'm not sure uh, there's a lot left in that. Um, so I would, you
Yeah,
know,
because it's like a new industry as well, basically,
yeah.
data centers.
Riot is up in the last year 120%, which,
It's pretty good.
yeah, pretty good. It's up more than Coinbase.
What was it?
That's
As
pretty
in,
good.
yeah, because they go up very fast and then they come down almost to the bottom. These miners,
Well,
but
because
that's
they're levered, because they were levered so much.
because they
And
were levered so much.
yeah, they had a lot of debt, right? And the debt, um, almost, well, did kill them. Core Scientific had to file for Chapter 11 bankruptcy in 2022. I think it was 2022, after after Bitcoin dropped 75% and it had too much debt. So these guys got heavily levered, and then that's bad when prices drop. So I think mining is a very speculative area. I don't know if I would recommend it for most people.
Mara is $16 at the moment.
Hmm.
Um,
And then, lastly, the DATs, what they call them, the digital asset treasury companies. I'm not a fan. I would stay clear of those. Yes, I know MicroStrategy has done very well in the past year. You know, Bitcoin is up now less than 100%, but 90%. And, MicroStrategy past years probably up 140% or something. I haven't looked in a week or so, so it might be up more or less. But you got a multiple because they were using leverage. But I would stay clear of the digital asset treasury companies. That to me seems like a fad. It seems like SPACs.
I agree. I wouldn't bet on those. But from their play, do you think that they're doing it to speculate, or you think they're doing it to preserve what they hold, to preserve their fiat basically in Bitcoin?
Who? The DATs?
The treasury companies.
Yeah, yeah. I think they're just speculative ventures. Uh, I don't understand the value of them. I hear people say, "Oh, well, they're going to take your," because I would say, why not just buy the crypto directly? Oh, they're going to do something with it. What are they going to do with it? They're going to use DeFi techniques. Well, then they're going to take risk with your crypto, right? That's what DeFi is. It's taking risk. It's using leverage. So, well, you can do that with your own crypto, and you don't have to pay a premium for the DAT. Uh, yeah, I would not recommend owning any of those. And historically, any kind of holding company that holds some asset trades at its net asset value or something below the net asset value. Rarely do they ever maintain a premium. So, yeah, I would not own those. If you were lucky enough to have gotten in those before the wave took off, you did very well. But if you're looking at them now, that ship has sailed. I would not do it.
Okay. It seems like you feel 2026 is going to be a tough year, or
I don't know.
you don't
I
know.
will tell you, I just don't know.
You don't know.
I don't know. Like it's uh yeah, I don't want you to think, which is probably hard for a lot of people. I don't have a strong opinion because I don't know. I
Yeah.
just know probabilities. And I would say there's a 50% probability crypto will retreat in 2026, but means there's a 50% chance it'll go up, right? But I don't like those odds.
Okay. So, as let's say a last question, because I've gone through my questions.
Yeah.
In the sentiment, because we touched on sentiment quite a few times. In a cycle, don't you have to hit greed, and don't you have to hit euphoria?
Yes.
Either we've been in a state of greed since the November pump in 2024, and that's why we're sort of maintaining this level. But the on-chain suggests we're in belief denial still, and we've come up from optimism, and I can't remember the other one. My question is basically, to complete this cycle, I think we need to go up, because to satisfy the sentiment. Otherwise, we don't. We keep on going sideways, which I don't have a really problem with. But if we go sideways too long, then I think we go down. That's where I'm at.
Yeah, because people lose faith. You are absolutely right. Uh, uh, you, in 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 every market cycle, you usually have a period where there's euphoria, right? We have not had that. In fact, I don't know. I looked yesterday. Fear and greed index was in the 30s, um, which is a very positive thing for us, right?
I agree.
Like, I like to see fear and greed in the single digits, which it's only been a few times. And as I've said, probably to your audience, when fear and greed is between 21 and 79, ignore it. It's not very useful of an indicator. When it is above, and when it's 80 or above, you should be very cautious. Above 90, you should probably be reducing your position.
Yes.
When it is at 20, um, it's becoming an attractive time to accumulate. And below 10, which it's only been a few times, it's a no lose. All right. When it's below 10, you should try to acquire as much Bitcoin as you can. And where Bitcoin goes, so do the other cryptos. So, just if you want to own the other stuff, own it too. But um, it is a very reliable indicator. And the reason it's a reliable indicator, because fear and greed index is a sentiment index. And 100% of the value of crypto is sentiment driven because it has no assets associated with it. That is why it's a very good indicator. Right now, we're in the kind of fearish area. We're below 50, below 40. That's a good thing. It says to me, if that was to go to 90, Bitcoin would probably be over 200. And you may be right that we are going to get a pop at some point before we have the crypto retreat in price. You may be right, but it's comforting to me that it's below 50 right now. And it says to me, there's not a ton of risk that we're going to drop in the next 2 months rapidly.
Exactly.
But, going into 2026, we just don't know. I don't know. And no one who says they do know. So hopefully your audience knows not to believe those bullshitters. Just do what I said, which is know how much you're willing to put at risk and have a longer term time frame if you want to get in right now.
Yes, for sure. Really interesting. I just hope, I think that there's a chance. I just want to just see your thoughts, and then I really have no questions. But is there a chance that we've been moving similar to 2015, 16, this last year, not the end of 2017?
Yep.
And now there could be a shock that, let's say, Bitcoin's at 130 by December end,
Yeah,
140,
that's
and
possible.
who's
That's
selling that?
possible.
Who's selling that really?
If it goes from here to 130, well, the Wall Street short sellers will be selling. They will, because
Okay.
they would love to pocket a 30% gain or 25% gain in 3 months. Yeah, annualized, that's 100%. They would love to do that. If they're levered 4-to-1, they would get 100% return. So they would be selling to lock in that return. But it's certainly possible. As I said, Bitcoin can move plus or minus 10% in a 3-week period. So, we have roughly 90 more days, right, of trading
It's good.
in 2025. It could go up to 130. In fact, I would say that's within the very possible range.
In
And
December. End.
well, before
End.
December ends, yeah, within the next 90 days.
Yes.
I That would be very reasonable to me. Um,
That's
Equally
positive for me.
reasonable, it could be at 90, right? Yeah, it's reasonable. That range wouldn't surprise me. Um, but it's sentiment driven. The sentiment is a bit uh, negative right now. The stock market sentiment, I would say, is it's pretty solid, right? People, there's a lot of leverage in the stock market, and we have historically high prices. That's pretty good too. But it's becoming the end of the year. There may be some investors who want to lock in their profits, so
Yeah.
they may sell off,
True.
right? And that would lead to a retreat in the stock market, which would lead to a retreat in the price of Bitcoin and therefore other cryptos, because they're all correlated. So keep that in mind. I would say, you know, your audience should be looking at what is going on in the stock market, because that's going to have a
Interesting.
big impact on what's happening in crypto.
Really good. Really good point. I never thought of that. Thanks, William. This has
You're
been
welcome.
another interesting video. Thank you for your thoughts.
You're welcome.